Yesterday, I had a post on Oracle. Yes, the stock Oracle. Why? Because there was some news coming out from the Trump administration in regard to an AI joint venture with SoftBank, with OpenAI, and with Oracle, and that sent the stock sharply to the upside. Technically, the price also moved above some key resistance level, was coming off of a low and bouncing to the upside. So there's room to roam on the top side as long as the price remained above these technical levels. I'm going to go through what happened to that stock and trading here today and try to outline where we stand from a technical level right now. So let's get started. My first focus was on the daily chart, and off the daily chart, you can see that the price moved above its 100-day moving average in trading yesterday. That is coming off of this low right here, which happened to be this low, near this low of a gap move to the upside. I saw the price move from this level to this level right here off of an earnings announcement, and the price never looked back, moved to the upside. So holding support here and here was positive for the stock, and already it had moved up for 4 consecutive days to the upside before the break to the upside in trading yesterday. Took the price back above the 100-day moving average. For traders who were in on this earlier, they might have looked at this 38.2% retracement as a level to try to stick a toe in the water. That's of this move to the upside from the December 2024 low to the high price that we saw in 2025. Getting back above that 38.2% retracement was a bullish sign, and that proved to be another good level to get to take a long position. But if you got in, when the price moved above the 170 level up to 171, when I did the post yesterday, my premise was as long as the price can remain above this 100-day moving average, it would be more positive. We could see further momentum in the upward direction. Moreover, I took a look at the hourly chart, and on the hourly chart, the move to the upside yesterday also moved above its 200-hour moving average. That's a green line in this chart. It was moving to the downside. And in the post, I said, well, maybe if the 170-ish type level is too close of a risk level for your liking for a trade, you could use a 200-hour moving average as a more comfortable risk. That was down around the 168.50-ish type level. It's currently at $168.27. So as long as the price remained above that level, then the bias remains to the upside from a technical perspective, and we will see how this momentum goes. Remember, there is plenty of room between the price over here at 170 and the price, the high price, the most recent high price that we just saw in the month of December, all up here at the 198.31 level. So there's room to roam as long as the price can remain above the 200-hour moving average. So what happened in trading here today? Well, they had that press conference after the close, and the stock started to move higher. We also had better earnings coming out of likes of Netflix, and the market in general was in a positive mood. So we saw further momentum to the upside, and that momentum to the upside actually opened the price up around the 186 level, up around this level right here. And then immediately the price moved higher, moved up to a 192, which took the price above this swing low right here before this gap off of the earnings in December. So that was more positive, but as you can see, we failed, and we started to rotate back to the downside, moving all the way back down to the 61.8% retracement of this move to the downside. That 61.8 came in at 180.78, and the low price for the day came in at 180.57, just below that level. Moreover, it was just below these highs, this corrective high after this gap to the downside off of that earnings again. So this was a good level for buyers to come in, and indeed they did, and they forced the price back to the upside. We're currently trading at 185.11. That's up $12.56, or 7.28%. So the question becomes, what now? Well, with support holding against the 61.8% retracement, I can now use that level as a risk-defining level, like we did over here against a 200-hour moving average. Using that level as a risk-defining level, I can say that, well, as long as the price remains above the $180.78, I'm going to stay with the position and see if the momentum can continue this stock for more to the upside. Obviously, the next target on the top side would be at that 188.93 level. That's this level right here, which we, again, broke above and failed. I wouldn't be surprised if we see sellers against this level. That may happen. And if I want to take some profit against that level, or you do, you can lean against that level, and sell some of your position out, take the quick profit and be happy with it. Or if you're married to the 61.8% retracement of your stop level, let it go. And if the price moves above that level, we look toward the high price that we saw in trading here today, and then start to look toward our high prices, including this one right here, and the all-time high price of $198.31, which occurred back here right before the earnings announcement that forced the price to the downside. So that's the decision that you as a trader have to make. But for those who took my advice yesterday and bought with the stock below the $168 level, you have a good gain on the stock. Good fortune for you. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.